The lie everyone believed. September 2008. Peter drops a line that instantly chills the room. Jesus, we're screwed. $1.2 trillion in assets could be worth nothing. And that's where this story begins. The story of one of the biggest financial collapses ever, and how everything starts falling apart in just 24 hours. An elevator opens on the 42nd floor of a skyscraper in Midtown Manhattan. 4 HR employees step out, each carrying a box. The moment they walk onto the trading floor, everyone already knows what's happening. Layoffs. They split up quietly, each with a list, each looking for specific names. One of those names, Eric Dale. Eric isn't just anyone. He's the head of risk management. 19 years at the firm. The guy whose entire job is to understand how much danger the company is in. A few minutes later, he's sitting in a glass conference room while the entire floor watches. They offer him 6 months severance at half salary. He has until tomorrow to accept. Eric tries to push back. What about my work? I'm in the middle of something important. They brush it off. We have a transition plan. But the truth is, they don't even know what he was working on. Within minutes, his email is shut down. His phone is cut. His access is gone. Just like that. As Eric packs up his desk, a young analyst named Peter Sullivan is waiting outside. Peter's not your typical Wall Street guy. He's got a PhD in propulsion engineering from MIT, basically a rocket scientist. But Wall Street pays better, so here he is. He thanks Eric. You were the only one here who actually listened. Eric pauses, then pulls out a USB drive from his box. I was close to something, they didn't let me finish. Take a look. Just be careful. The elevator doors close. Peter stands there, staring at the drive in his hand, not realizing he's holding something that could blow everything up. To understand why this tiny USB matters, you need to understand the lie that built the entire system. It all started with a simple idea. Why rent when you can own? And America said, yeah, why not? Banks started handing out mortgages like candy. A strawberry picker making $15,000 a year gets approved for a $720,000 home. A stripper in Las Vegas buys 5 properties. These were called ninja loans. No income, no job, no assets, no problem. And the banks? They didn't care if people could pay them back, because they weren't keeping the loans. They were selling them. Wall Street turned it into a game. They took thousands of risky mortgages, bundled them together, and created something called mortgage-backed securities. Think of it like a sausage. Individually, the ingredients might be questionable, but grind them all together, package it nicely, and suddenly it looks safe. They even labeled it AAA, as safe as government bonds. Never mind that half the borrowers couldn't actually pay. Half full, they'd say. And people believed it. Pension funds bought them. Retirement accounts bought them. Banks across Europe bought them. Everyone was eating the sausage. But no one wanted to look inside. The bomb. 10:17 p.m. The office is empty now. Just Peter, the quiet hum of servers, and the glow of screens. He's been working on Eric's file, a risk analysis of those mortgage-backed securities. He runs the model again. Same result. His hands go cold. He calls a few colleagues over. Hey, can you take a look at this? They use something called value at risk, basically a model that predicts worst-case losses. It's like a weather forecast, but for money. It says, 99 days out of 100, you're safe. Sounds reassuring. But here's the problem. It tells you nothing about that one day that destroys everything. And Peter realizes that day isn't coming. It's already here. The losses they're sitting on have already gone way beyond what the model ever predicted. 11:44 p.m. Sam Rogers, the head of trading, arrives. He studies the numbers, quietly, for 3 full minutes. Then he looks at Peter. You sure about this? Because if Peter is wrong, his career is over. But if he's right, none of them will have one. Within minutes, the entire floor comes alive. Executives rush in. They start asking questions. How did we miss this? The answer is simple and terrifying. They assumed the risks were independent. They thought if one person defaulted in Ohio, it wouldn't affect someone in Florida. But the housing bubble connected everything. Now, when one falls, everything falls. Then, suddenly, a helicopter lands on the roof. The CEO has arrived. John Tull. He walks in and gets straight to the point. Someone tell me what's going on. Then he turns to Peter. Actually, I want to hear from him. Peter explains everything. They've been packaging mortgages into securities, holding them while they're processed, and using massive amounts of borrowed money to do it. Now they're sitting on $1.2 trillion worth of these assets. And the math no longer works. In fact, it hasn't worked for weeks. Peter says if these assets drop just 25% in value, the loss would be bigger than the entire company. John pauses, then sums it up brutally. So the music's about to stop, and we're the ones left holding the biggest bag in history. Silence. Then he gives the order. Sell everything. Today. But there's a problem. Who would buy it? John's answer is cold. The same people we've been selling to. They all know what this means. They're about to dump worthless assets onto people who trust them just to survive. The fire sale. 7:30 a.m. The traders walk in. Usually loud, confident, arrogant. Today, silent. They look like men walking to an execution. Sam stands in front of them. We're selling everything. Every single position. By the end of the day. And then he adds the incentive. Hit your targets, and you get millions in bonuses. And just like that, it begins. They pick up their phones and start calling people they know. Friends. Old classmates. Trusted clients. Hey, I've got something for you. Good deal. The buyers think they're getting an opportunity. They're not. They're buying garbage. By mid-morning, people start catching on. This stuff is toxic. Why are you selling it? But it's too late. Prices collapse. From 96 to 85 to 70 and lower. By the end of the day, it's all gone. The firm survives. But the damage? Just beginning. What you just heard is based on the movie Margin Call. The characters are fictional. But the crisis? Completely real. In 2008, this exact scenario played out across Wall Street. Over the next 2 years, millions lost their homes. Trillions in wealth disappeared. Entire neighborhoods turned into ghost towns. And the government? They stepped in with a $700 billion bailout, saving the same institutions that created the problem. Back at the firm, the trading floor is empty. Everyone's gone. Except Sam. He finds the CEO calmly eating like nothing happened. Sam says he's done. The CEO shrugs. It's just money. It's all made up anyway. Then he lists past crashes, showing it's all just a cycle. Boom. Bust. Repeat. Same winners. Same losers. Sam listens, then finally says, I'll stay not because I believe you, but because I need the money.